What a wild week in the markets. Bitcoin is seeing green, gold hits another all-time high, and the US dollar just dropped to a 3-year low. Meanwhile, President Trump is reportedly trying to fire Jerome Powell, and behind all these headlines, there's some serious builders that are raising some serious money, from AI memory agents to massive bridge protocols. It's a lot. I'm Mick. That's Mike. How's it going, Mike?
Good, man. How are you?
Good. You know, I was in Paris for Paris Blockchain Week, and
how was that?
It was great. It's good to be back, though. Not gonna lie, it's good to be back home on the microphone talking to you about the biggest news in crypto, and we've got a lot to cover. So let's jump right in. The first thing that I want to cover with you, Mike, is the overall macro situation. We're seeing the stock market take a dip. Meanwhile, Bitcoin and gold are going up. And this poses the question, are we finally in this place where we're starting to see crypto diverge from the traditional markets? Or are we just kind of jumping to conclusion over this whole news around Jerome Powell potentially getting fired by Trump and just the overall instability right now that we're seeing in the US?
Yeah, we've always said historically that Bitcoin is the safe haven, store of value, the inflation hedge. If shit hits the fan, Bitcoin is going to be it. But it never really behaved that way, right? It always kind of tracked the stock market. But I don't know, we're seeing a little bit of this behavior that we theoretically expected now, right? Like you mentioned, the dollar index hit a 3-year low of 98.5. Gold has been going nuts, right? It hit another record high of 33.82. Bitcoin was up to around 88K. I think it's settled down just below 87K right now, last time I checked. So, it looks like it's holding up against, an S&P 500 that's down over 3% today. And I don't know. It's hard to really say that this is the fork in the road, that this is where the divergence happens right now, and it's going to continue to do that. I just think that we're seeing a confidence in the US and hence the US dollar at an all-time low right now. We've got a president that has no clear tariff strategy, that the threat of tariffs has just upended everything, and no one knows what he's going to do next. There's, like you said, he's calling for the firing of Jerome Powell, the Federal Reserve Chairman, and which is supposed to be a politically independent government agency. And I think everyone in this world, all the investors, the traders, all the other governments are just seeing this as like just a complete clown show. And no one has confidence in the US. No one knows what's going to happen next. Hence, traders are selling the dollar against other major currencies, those markets that seem to be more stable than the US is right now. Bitcoin and gold positioned, kind of as hedges, as we expect, against the US dollar, are going up in lockstep or holding strong. It's a crazy time. It's a crazy time, man. Like, people have asked me, I'm obviously a big proponent of Bitcoin, and people have asked me, oh, like, Mike, do you think that Bitcoin can become the global reserve currency? I was like, look, if Bitcoin were to become the global reserve currency, like, shit has to absolutely hit the fan, right? Like, the US dollar has to be tanking. There's got to be just economic craziness, and we're kind of getting there right now. I don't know if it's going to really hit the fan, but we're taking some steps to that that end of Bitcoin being the global reserve currency. What do you think?
I don't want to be a pessimist in this situation, but where you think pounding the table on Bitcoin being a flight to safety, I mean, as powerful as he is, and as much as he has the ability to move the markets with what he says, I don't feel like we're there. I feel like this is something that's going to take a lot of years to get to. It's still a risk on asset as it's viewed by the market. And so whatever S&P 500 does, usually that's what crypto does. I don't know the exact reason for why it decoupled, at least momentarily, because usually it tracks, right? If S&P 500 is going down, Bitcoin follows suit, and it'll usually double whatever S&P is doing. Now, when you look at what happened overall just in April, March, Bitcoin held out pretty well, right? And I don't know, it could be that it just sold off a lot earlier than the traditional stock market. And going back to your point around this whole craziness of Trump. Trump is just trying to decrease the yield curve, right? That's his ultimate goal, and he needs the help of Jerome Powell, or the Fed in this case, to do that. How it's going to go down, we really don't know, but that's his main goal. He's a real estate guy, and so he wants those interest rates to drop. He wants everything to be fully stimulated, and whether it's Jerome Powell, whether it's somebody else, he doesn't really care. That's his main goal. And so this feud is just a matter of two people with two different goals in mind. And it's creating a little bit of uncertainty. But look, we've had uncertainty before in the US market. Every time there's a new president, usually in the beginning, there's some form of uncertainty. And usually Bitcoin and the cryptocurrency struggles along with the rest of the market. And I don't see any other deviation happening here unless, like you said, something so tragic happens that Bitcoin becomes the global reserve currency. And I don't think it's in any country's interest to create that. So
yeah, I agree. I agree that there is always a little bit of uncertainty with new new administrations in office. I don't think we've seen anything like this before. At least I haven't in the time that I've been alive. I was not there for the Smoot-Hawley Act of were there the tariffs back in the day. And I think that no matter what you think about what the end goal is, and getting those rates down, President Trump has said that he wants to get the rates down, right? There's the whole deficit and the debt payments. Billions of dollars a day are owed on our debt. Yes, it's important to get those rates down, but we've shown that what he's doing now is not getting those rates down. So he has to force the hand of the Fed to do that, and then going back and forth and tariffs and everyone just. The 90-day freeze and then, reciprocal tariffs. It's just uncertainty is killing everyone. That's the whole thing. No one knows. No one is going to make any investments, whether that's CapEx investments into, bringing manufacturing jobs to the United States, which is obviously a goal of the Trump administration. They've said that publicly. No one's going to make those investments because you don't know what he's going to do the next day. You're not going to invest billions of dollars into onshoring manufacturing when you have no idea what policies are going to change because they've changed so frequently.
And, some argue that is the whole point, that you want to create this uncertainty in order to cool off the market. Now, some people think that's a bogus idea. I totally hear both sides of that story. But could it be that whether it's right or wrong, that creating this uncertainty is intentional?
I think that is part of their plan, 100%. And I think that this is clear that this is a losing strategy. So again, there needs to be time, right? We're only 3 months into the administration. I just think all signs are pointing to this is not working. And then, that is partially the reason why, so we see this a bit of a divergence because the confidence in the US is at an all-time low. So that's, sad to see, but again, it's we're seeing this because of the terrible position that we're in.
Usually we're at this point now where, okay, market starts to do better, Bitcoin is doing better, usually Ethereum follows suit. We're not really seeing that right now. Everything has been delayed by a year. Do you feel like the 4-year cycle is still in play?
I think we saw some cracks in the armor in the 4-year cycle last year. Right, we saw the Bitcoin ETFs were something that we thought were going to kick off the big bull market, and then follow that up by the halving, which usually kicks off a bull market a few months after that happens. And then I just think that there were so many things that happened and then the elections, that it goes against this 4-year cycle. I think the 4-year cycle, as we knew it at least, doesn't exist anymore.
I think that the 4-year cycle is still in play. But this is why we have these conversations. I think every time there's a new story, right? There's a new narrative. We've never seen this before. We've never seen that before. The stories change. But when you look back at the history doesn't repeat, but it tends to rhyme. And I don't see any indication why this time around it's any different.
So do you think that this bull run is going to be dependent on something happening, some kind of QE happening, like happened in COVID, where they just printed a whole bunch of money? Like that kind of quantitative easing, and there's something going to be this catalyst of lower rates or whatever it may be, Jerome Powell getting the boot and then rates being lowered. Like, do you think that there's going to be some kind of event like that that's going to happen later on this year, or what? Yeah, what are some other reasons you think that it's something similar is going to happen?
Look, I'll preface by saying there are experts that have YouTube channels that literally spend all day, every day looking at this stuff and studying this stuff. Having said that, whenever I do my research, from what I'm seeing is everything is related to quantitative easing. Everything's related to the money printing, the debt that we're in, the interest rates. If you look at previous cycles, everything has to create this it's like a recipe, and you need to have all of the ingredients. And if you don't, you can't create that type of confidence in the market for things like Web3, things that we're passionate about, to really do well. You need everything to fire on all four cylinders. And we're not really seeing that right now. And that's why, going back to the question about us deviating away from the traditional market, I don't see that, because we're still heavily relying on the traditional market in order for us to do well. We're relying on what's happening with Trump and tariffs. Everything is still connected, in my humble opinion. And so, yeah, I think that we need to see the interest rates drop. We need to see the yield curve go down. And look, if that requires the Fed stepping in and saying, look, nobody else is buying these bonds, we're going to step in and buy them, and that's going to stimulate the economy. Everything, no matter what, it's going to translate to us printing more money. Like that, all roads lead to us printing more money, and so it's just a matter of when, not if. So,
okay, follow-up question. Okay, when, not if, the bull run happens, what is going to be the trend in crypto that takes off, right? Like, 2017, there was ICOs, and then 2021 it was DeFi, and then followed by NFTs, and last couple of years was meme coins that take off. Is there a crypto native product narrative that you think is going to take off?
So I feel like possibly. And that actually leads us to the next story that we're in. Yeah, we'll definitely get to that with Base, and they're in a world of trouble. But I still think AI has a place, because once the markets come back, your risk on assets in the tech world, right, Teslas of the world, they'll do well. And that NVIDIA, for instance, and those kind of get the conversations going again around AI. And since you can't directly invest into AI, but you can in crypto, I think that narrative will come back. Now, right now, that narrative is not hot because it's very risk on, right? So right now we're talking about stable coins, we're talking about payments, and all those things are very important. But that's kind of like the infrastructure, right? These are the kinds of conversations that are popular during the bear market, right? Like focusing on things that truly build the foundation, right? But with AI, it's fun to talk about it. It's exciting. It's extremely risky, but everyone's into these conversations. And I think that will come back once we get to that point where we are experiencing an altcoin season. Now, a lot can change, right? I still reserve the right to change my opinion, but based on what I'm seeing right now, I still think that is going to be a very hot topic to explore once we get to that point. But Mike, you mentioned something about content coins. So let's talk about this drama around Base. And that meme where you have that one guy that's getting ready to be hung, and he's kind of looking over saying like, hey, first time here.
Yeah.
That's what it feels like. Solana standing next to Base, and Solana's telling like, hey, first time, because Solana tends to have a lot of heat and drama around it. And maybe some of it is warranted, but in this particular case, it's Base. They're in some drama right now over Zora and promoting this coin. Well, I'll let you share the story because I know you've done a deep dive into it, but what's the scoop on this drama behind Base?
Yeah, so last Wednesday, the Base Twitter account tweeted an image that said Base is for everyone, and then linked it to an ERC20 token on Zora. For those who don't know Zora, it's a social media platform that tokenizes content. And this absolutely kicked off a firestorm, right? Obviously, Base has got almost almost a million followers, and people were buying the token. So it surged to a $17 million market cap in a very short amount of time, then crashed 90% within hours. Now it's rebounded a little bit. I think it's just under 6 million market cap. But the story got a little bit deeper. After some on-chain analysis, 3 wallets look to have bought tokens before the announcement and sold for about 666K in profit. And top holders control 47% of the supply. So it's like very representative of a pump and dump that you see a lot with meme coins, right? It's not great that Base, which is part of Coinbase, obviously that public company, had promoted it, right? And so a lot of the critics accuse Base of enabling this pump and dump behavior and potentially damaging Coinbase reputation. But you look, the head of Base, Jesse Pollock, he absolutely is just going hard with this. He is just saying these are content coins. Let's put all content on chain. He's like looking at the tweet that you're showing, comparing content coins to meme coins. Then it goes in further. He doubled down and posted this promotional video that says Base is for everyone, and you can see some things saying there that says Base is for squirting, Base is for pimping, right? So he's really not leaving anyone out. Okay, he's truly saying Base is for everyone. And then he just went on Bankless, defending his position. He was saying, "Oh, this live stream should be tokenized." And now Zora is riding this wave, and they're announcing they're launching their token Zora on April 23rd. So just a lot of things happen in a short amount of time. Okay, let's talk about content coins. Let's start there. Seems like it sits somewhere in the middle between an NFT, right, that proves ownership of a piece of content. It could, right, like a piece of art. Of course, it could be applied to true ownership of real world assets and documents and whatnot. But like in this case, a piece of content where there is a market, there's provenance there, and there's a market around a single on-chain asset for a single piece of content. And then there's a meme coin where it doesn't really have content attached to it, but it brings together a community. It's just a liquid token. So you've got a combination of an NFT plus a meme coin in this content coin.
Mm-hmm. Now,
is there a role for this? It's just kind of interesting. Like, look, one of the best things about crypto is it makes a market out of anything, right? Is this going to last? I don't know. It's an interesting experiment, I think, and I think that's one of the things that Jesse is good at doing and is open-minded to kind of having a lot of these experiments. Let's start there.
Okay, so Business 101, when you talk to entrepreneurs and they provide all the different ways that you as a business can generate income, they talk about you can do drop shipping, right? You can launch a product, you can sell information, right? Information is one of the largest, one of the best ways to make money because startup cost is generally low. Your margins are insanely high if you provide the right information, right? So
low margin
information
of producing more units. Yep.
If information is considered an asset, and part of the narrative in crypto is tokenization of real world assets, then I'm just connecting the dots here, right? Mm-hmm. I'm just saying, okay, well, it makes sense that you would tokenize a tweet because tweet contains information that one may consider to be valuable, right? It doesn't have to be a tweet. It could be whatever posts you want to talk about, right? Social media. Yeah. And people pay for this already, right? People subscribe to certain channels and they pay extra money just to have access to that content. So to me, it makes sense. Now, if you're asking me whether or not I would buy something like that, I don't know, because I don't know anybody that is posting information so valuable that I'm willing to invest in it, right? But I don't know, maybe if this narrative takes off enough and there's enough traction, I could be convinced, right?
Yeah, so that's the interesting thing, because like what you said about inflation, let's say like creating an ebook or something like that, right? Like a lot of people pay $1 to $5 to the writer of an ebook to buy it and to get access to that content, right? Usually behind a firewall on some website, right? And I think that is, I guess, more aligned with an NFT, right? I'm paying for this one particular piece of content. Maybe the NFT is is it's not a one of one. There's many copies of that NFT, right? Maybe it's part of that a collection, a 10,000 collection that was so popular. But kind of the unique thing about this is like you're not paying for the actual asset, right? With a content coin, you're paying for a token that indirectly represents that asset, right? And I think that's where it's unorthodox and a little bit indirect. Also, I think that's what makes it interesting. Right? You're rewarding the creator of that asset, but not necessarily directly purchasing that asset.
And I will say that this model isn't brand new. In fact, there's a project on Solana that I've known about for quite some time. In fact, they came on to my community called Network Spotlight. By the way, the link's in the description if you want to sign up to join that community. Shameless plug. But I had them on and they did a demonstration about what it is that they're launching. So I feel like the reason why this narrative may take off now is because Base made the headlines and there's a lot of controversy around it, but it's nothing new. It's something that I've seen already done before on Solana. Whether or not it takes off is a different story, but I like the experimentation with it. Something that you mentioned before. And let's see where it goes.
Yeah, and I also think there's always this risk. Like we said, crypto can make a market for anything, and there's always this risk in crypto with the financialization of everything that there's going to be value goes up, value goes down that may not be commensurate with like the actual value of the asset or things value. Tokens go up in value based, plainly on narrative versus utility. They're overall, low liquidity. There's a lot of low liquidity assets where these prices and market caps can be manipulated. So you got to be careful in doing things like that, especially with Base, being linked to Coinbase. But yeah, I agree with you. I think it's a cool experiment, and I think it also just shows that there's so many we're early. There's so many iterations of products and different tokens that we can play with here, and this is just another example of the experimentation that's still happening because and still should be happening because we're overall still very early in this industry.
And this also taps into SocialFi. When you compare SocialFi to other entertainment type of applications like gaming, for instance, it's a lot easier to start that, and the virality of it can be so much more intense than a game. So if you're competing in the traditional world with like a gaming studio, like good luck with that. If you're an indie studio, it's very tough. You need a lot of money. And so the risk is extremely high. Whereas with something like this, like with SocialFi, things can get viral very quickly, and your startup cost is pretty minimal. So I think we might see a lot of experimentation around this, tokenization of social media. So yeah, it'll be interesting. And the other thing that I'll note here is that a lot of these narratives start also with what's happening on the funding side. And Mike, you bring to me 3 different projects that go through a funding round, including one today that we're going to cover that locked in $55 million. So let's jump right into it. Let's first start with Plastic Labs.
Yeah, I love this trend. So Plastic Labs is an AI identity and cognition platform. They raised $5.35 million in a pre-seed round. Super cool website, by the way. I love it. So this round was led by Variant Fund, White Star Capital, and BetaWorks with participation with a bunch of other VCs. So their flagship product is called Honcho, and it's a platform that enables developers to personalize any LLM based on like the memory of insights out of each user interaction. So it helps build user identities. It helps kind of memorize past interactions, past prompts, past styles, and then helps agents improve based on this memory. And so ChatGPT recently released a bunch of memory upgrades that very, very, very similar, right? It will understand so I use ChatGPT to sometimes create tweets and create content, and it'll kind of understand my style, my length, and how I prompt based on the past inputs that I put in. And Honcho helps builders integrate this into their LLM. So, this is what we call agentic memory is going to be huge. So I think that's just the kind of the next step in these LLMs, learning more about us and through our historical interactions, and then using that to provide better answers to our prompts. So I think this is going to kind of be the next big wave of functionality that LLMs can provide to us.
Sounds pretty cool, because I know one of the I also use ChatGPT to kind of help me with my content, and I do agree that it just speaks in a very it speaks in the same tone, and
generic.
Sometimes I don't feel like I resonate with the content that it's putting out, and so it sounds like a pretty cool product. I'm curious to know how dev focused you have to be in order to start. It says start building with Honcho in under 5 minutes. So
this is a developer tool, right? It's on the back end,
right?
It's integrated into LLMs, right? So it's not something that we would access their functionality if the developers is building models as we interact with the with the ChatGPTs the Claudes and all that as consumers.
Next, Mike, let's go over ORO AI. So I guess this is a AI play.
So it's a decentralized AI data monetization platform. They raised $6 million in a seed round, led by A16 Crypto Start Accelerator and Delphi, with participation for a bunch of other VCs. So I think this is actually one of the hardest problems, but potentially the most valuable solutions in distributed AI. Allowing users to contribute data to AI development and then maintain privacy through advanced cryptography like ZK proofs. And this is what ORO is providing. We have a ton of data that is captured by our social media use, now our AI use. We just talked about the memory of it and how all our data is being captured. Google, Apple, Facebook, Amazon, capturing all of our data, all of our preferences, and using that to their profit without us, the users, being able to benefit for that. And I think this is one of the hardest problems to solve. Being able to get the right data, get the right data from a lot of people and compensate them for it. And I think this is a dream. This is kind of the holy grail of AI for decentralized AI. And ORO looks like they're taking steps to being able to build a platform where users can get compensated for their data, and have that data be valuable to train AI models, and do it all in a privacy preserved way.
And then I also noticed that Near Protocol is an investor in them, and I don't know if people realize this. So Near made a lot of headlines last cycle, and they've been kind of quiet for the most part. And when this whole AI narrative took off, it was mostly led by Solana and Base. But what a lot of people don't realize is that Near has also been going pretty hard in the whole AI space as well.
100%.
I don't know if you took notice of that, Mike, but
and Jensen touched Ilya's arm. Remember that? I know.
So he probably transferred a lot of his talent and skills to him, and that's what we're gonna see right before our eyes. No, but it's interesting to see the kind of work that they're doing behind the scenes. And
it makes sense, right? Ilya wrote pretty promising. Ilya wrote part of, he was an author of the Transformer paper, so it makes a lot of sense that Near is focusing on AI, and they certainly have the skill sets to do so.
Last but not least, Mike, is a name that a lot of people, at least those of us that work in the industry, spend a lot of time in the industry, know this name, which is LayerZero. They secured $55 million. What are they up to?
Yeah, they're just doing a lot of volume, right? Like they raised $55 million in token sale from A16Z Crypto, and just looking at their numbers, I was pretty surprised. And I knew they were always one of the most popular bridges, but they processed more than 50 billion in cross-chain transfers, 138 million total messages, supports over 120 chains, and has over 300 apps built on it. We've talked about a few recent fundraisers in the bridge space. Across Protocol raised a big round. And now we're looking at LayerZero. Axelar also raised a big round a few weeks ago. So we're seeing these bridge wars heat up, and I think this is also good for the industry, right? I think we all talk about a multi-chain world, how bridging should be abstracted from the user experience, and with these increased volume that all these bridges are doing, and they're raising big rounds based on this volume. I think this is good for the overall industry to push us towards a lot of this chain abstraction and improving the UX to bring more people into crypto.
Yeah, there's a lot of bridges out there. Wormhole is another one that, despite the price action, I feel like it's still doing really well. They have a collaboration with BlackRock. Put your VC hat on, Mike. I mean, what do you think is going to take for one of these bridges to really dominate the market share?
Now, that's a good question. I think I would take a similar role with kind of L1s, where these bridges, just like L1s, are going to continue to grow as the overall industry grows, as usage of crypto grows. So will there be one single winner? I don't think so. I think that there will be probably a bunch, a handful, maybe 5 to 10 bridges that will take kind of the lion's share of bridging. But will there be like one bridge to dominate everyone? I don't think so. And I also think that you'll see some bridges that may focus on certain ecosystems and serve those ecosystems more strongly and seamlessly than other bridges. So like I think Across is focused on Ethereum only. And then you've got the other ones, and I think Wormhole is tightly linked to Solana, right? So you're going to see some of that happening, but I think I don't think you'll see 1 or 2 bridges dominate. I think you'll see probably about 5 to 10 taking up the lion's share, with them kind of carving out a little bit of a niche, with those a focus on some specific ecosystem and serving that ecosystem better than all the others.
Mike, I love doing these episodes with you because actually that episode where we talked about Cross Bridge, literally like a couple of days later, I had a pretty large ecosystem reach out to me about wanting to do an introduction with that team. So it's just been really cool to see how our content is making such a positive impact on the industry. It's helping people to connect. And so with that note, I just want to say thank you to you for bringing this content to the channel. And for those that are watching, big thank you to you as well. So if you like this content, please like it, give it a comment, share it with your friends, and let's all stay plugged into Web3 because there's a lot of exciting things happening here. Until next time, guys. Cheers.
Hi, welcome to it.